This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Today's podcast is brought to you by Leverage, a new fully featured decentralized futures exchange without compromise. Are you ready to trade the future of crypto today? Well, Leverage is a DEX, so you can trade with your keys and sign orders just with one click, and Leverage is fast. Yes, indeed, Leverage is powered by Gluon, a new layer 2 solution with the scalability and speed of a centralized exchange and the super low fees of a DEX. Yes, Leverage, the new exchange that combines the best features of CeFi and DeFi, so you can trade crypto spot or crypto derivatives with up to 100x leverage while maintaining control of your assets at all times. It's like William Gibson said, the future is already here, but in this case, it's evenly distributed and completely decentralized. Go to leverage.io, and leverage is spelled Leverj.io, and trade the future of crypto today.
Yeah, boy!
Hi everyone, how are you doing? Hey, I'm trying something slightly new today. I mentioned on last week's podcast with Josh that we are looking to increase the frequency of podcasts, probably to 2 to 3 a week. So 1 to 2 in the usual format with guest interviews and of course the very famous Crypto Conversation hot take round. But I also want to add a shorter weekly macro newsy style piece that looks at the important events or narratives of the week. So today is the first podcast in this style. It's just me, and I'm going to cover an event from this week that I think is, you know, a key part of the current Bitcoin bullish momentum. So as I record today here in New Zealand, it is Wednesday the 10th of March, but for most places around the world it'll be the day before. And right now Bitcoin is, as I said, looking quite strong, looking quite bullish. So I'm just going to load up and see exactly what the price is now. It's US $55,609. Yeah, so that is that's pretty bullish, and obviously that's the highest it's been for a month or so. So looking good. So the event that caught my eye this week was yesterday's announcement by Aker ASA or Aker ASA. I'm not even sure how you say that. Which is a Norwegian holding company engaged in offshore fishing, construction, engineering, oil, all that kind of stuff. And this company announced that it has established Seetee, a new company dedicated to investing in projects and companies throughout the Bitcoin ecosystem. And it's going to keep its liquid investable assets in Bitcoin. So in the announcement to this, Seetee said that it will initially focus on investing in and owning Bitcoin, on joining the Bitcoin and broader blockchain community, and launching Bitcoin verification operations, and building and investing in innovation projects and companies across the Bitcoin and blockchain ecosystem. It also said that Seetee will pursue these opportunities by building on the capabilities that have been developed in the Aker Group through the efforts in industrial software, fintech and green energy value chains. And this gives Seetee an opportunity to pursue innovations in the Bitcoin and broader ecosystem, especially in the areas of cybersecurity, financial transactions, and emissions-free verification operations. And it goes on to say that to accelerate these initiatives, it will actively partner with other companies, including a first announced collaboration with a Blockstream, which is a leader in Bitcoin and blockchain technology. I think this announcement is significant for, well, two big reasons really. So firstly, it's an announcement by yet another company that it is putting a significant amount of Bitcoin onto its balance sheet. So, you know, you will have noticed every week now we're seeing another announcement like this, and you know, this is This is what happens in bull markets as well, though, of course. Bull markets attract capital, and, you get this sort of cycle of bullish momentum and bullish news events. And, to an extent, it does become a self-reinforcing cycle. And in fact, if we're talking self-reinforcing cycles, just think of Bitcoin's 4-year halving cycle, which is, of course, one of the best examples I think of as self-reinforcing cycle. And as more and more investors learn about this and they recognize this and buy into the narrative, then, that cycle or narrative becomes stronger again. That's reflexivity, and look, it works until it doesn't. Anyway, at the moment, as I say, Bitcoin does look bullish. Now, I said there were 2 reasons. The second reason why this announcement is important is, I think, to do with energy, Bitcoin mining, the move towards renewables, and the climate change movement and the complex narratives that play into all this, right? So one way of understanding this is yesterday, Nick Carter. Nick is on Twitter. He's a VC at Castle Island Ventures, and he's a fairly prominent Bitcoiner. So yeah, Nick is one of these Bitcoiners who he's kind of been at the forefront of the charge to perhaps push back against those who might try and endorse the narrative that Bitcoin and crypto mining is an existential threat to the environment, right? And you've probably seen the rise of this narrative. I certainly have. There's these articles, and just today I think Bill Gates, I'm not sure where it was published, but in one of the big US papers, I think Bill Gates was talking about what a threat Bitcoin mining represents to the environment. So you see these headlines, Bitcoin mining consumes the same amount of energy as New Zealand or Finland, or insert your little country here, right? And just yesterday, you may have seen ArtStation. It's like some kind of creative arts platform. They had just announced that they were going to move into the NFT space, but then there was such a push back against that from their users who they threatened to boycott them because they see NFT transactions as unnecessarily energy inefficient, and again as this existential threat to the environment. And so ArtStation actually backed down and said they weren't going to enter the NFT space. So what I'm saying is, this narrative that Bitcoin and crypto mining is a threat to the environment, it's not going to go away. So in saying that, though, the reality of Bitcoin mining is much more complex and nuanced than what someone like Bill Gates would have you believe. The intricacies of that are a little bit outside of the scope of what I want to talk about today. But I think that the point here is that in reality, Bitcoin mining is an increasingly important part of the global shift to renewable energy. And I think that's where the narrative is going to move towards. But we need, bullish events and announcements by people who are committed to this to make that shift happen. And I think this announcement by Seetee is one really important part of that. So, all right, so I mentioned Nick Carter, right? So he said in a tweet yesterday that he was breaking his Twitter silence to say that everything we ever said about Bitcoin and energy is absolutely true, and if you don't believe me, take it from the second richest man in Norway with skin in the game. So who's the second richest man in Norway? So Nick was talking about Kjell. So please excuse my Norwegian pronunciation there, but Mr. Kjell he's the owner of Aker ASA or Aker ASA and its new Bitcoin division Seetee. And Mr. Kjell wrote a letter to his shareholders to announce this decision, or this new endeavor, as is customary to do. Now, I've read this letter, and it only came out yesterday, and the letter is perhaps the single most bullish piece written or published on Bitcoin this year. It's got to be up there, and if you've read anything by Michael Saylor, anything he's published recently, well, that's quite a high bar if we're talking bullish pieces on Bitcoin, right? So It is a brilliant piece of writing. The fact that it comes from Norway, from Scandinavia, also brilliant. So a link to the letter is in the show notes if you're interested in reading it to yourself. But look, I know not everyone likes to read, so if that's you, no worries. I'm going to read some highlights here. That is really what the purpose of today's podcast is all about. So get ready. Here we go. So I'm going to read some highlights from the letter, and if you're a Bitcoiner, hopefully you'll enjoy this.
Yeah, boy!
He begins. Dear shareholders, today we announced that Aker has established Seetee, a new company that will invest in exciting projects and companies throughout the Bitcoin ecosystem while keeping all of its liquid investable assets in Bitcoin. The new company has a capitalization of 500 million, an amount we aim to increase significantly over time as we gain experience and identify exciting opportunities. Before I proceed with our story, I want to state up front that I am aware that Bitcoin is often criticized for a number of perceived challenges, including its electricity consumption, inability to scale, and potential to facilitate illegitimate payments. We believe that Bitcoin can be a solution rather than a problem for each of these, but we will get to those arguments later. Seetee's strategy is threefold. Firstly, we will use Bitcoin as our treasury asset and join the community. In Bitcoin speak, we will be hodlers. We will be different, but additive. Perhaps not as rebellious as the cypherpunks who invented Bitcoin, but much more progressive than most established corporates. The team at Seetee is already running open source Bitcoin payment servers and will remain active contributors. Second, Seetee will establish mining operations that transfer stranded or intermittent electricity without stable demand locally, wind, solar, and hydropower, to economic assets that can be used anywhere. Bitcoin is, in our eyes, a load-balancing economic battery, and batteries are essential to the energy transition required to reach the targets of the Paris Agreement. Our ambition is to be a valuable partner in new renewable projects. And third, we will build and invest in projects and companies in Bitcoin's ecosystem. This is where our true passion is. Our home game is industrial applications, but we also believe that nicely designed modern user interfaces will enable new applications wherever transactions happen. We are particularly interested in micropayments and how these may enable us to avoid usernames, passwords, and our personal data being monetized with or without our knowledge or consent. See, this is good stuff, right? How good is that so far? As you know, you can tell that these guys understand Bitcoin's value proposition very well already, and they are way down the rabbit hole and skin in the game, and yeah, they are pushing forward. Good to see. Okay, so he goes on and he says next, Aker is part of the industrial establishment. As someone who started my career in the engine room of fishing trawlers off the coast of Norway, I'm very proud of what the company has become. But all large companies have one thing in common. They were once small, and many large companies are now victims of their own success. I will do everything I can to keep Aker curious, innovative, and able to keep up with the times. After 40 years in business, I have learned you always have to keep an eye out for new opportunities. And Seetee and Bitcoin marks that new horizon. It positions itself in the middle of an industry that could define the next several decades, much like the internet has done since the early 1990s. Seetee is an open invitation to push, pull, and poke life as we know it, to act like young entrepreneurs every day. On the shoulders of giants, our decision to enter Bitcoin is the result of a long and fundamental discussion about value. I have been drinking from the fire hose since last summer. While this letter is my way of expressing my thoughts on the matter, my insights are largely derived from reading articles and books, listening to podcasts and watching videos, as well as conversations with people around me. Our collective knowledge was derived from the extensive and brilliant material produced by others. Yeah, so good stuff, right? And so he goes on there he name checks a bunch of well-known Bitcoiners and so on. And so next, then he goes on to say that it's amazing to see that the cryptocurrency space attracts so many intelligent people from the younger generations, just as the internet did in its infancy. While precursors existed earlier, most would agree that Tim Berners-Lee's World Wide Web from 1990 was the start of what we recognize as the internet. Today we take it for granted, but it has only been around for 30 years, and the development has accelerated. Commentary on the internet's lack of useful applications or expert forecasts about its likely demise were frequent in the 1990s. Bitcoin was invented in 2009 and will go through similar waves of development before it achieves the application maturity that we are now used to with the internet. It's a testament of our times that the internet has given many of us instant access to information, but the real value comes when we let our curiosity navigate beyond the algorithms for recommended content. You can only challenge preconceived ideas when you are willing to go outside of your comfort zone. And it is Bitcoin that has inspired us to challenge our intuitive understanding of money. Having followed the cryptocurrency discourse for a while, we decided to reach out to the engineers who have made it their mission to change the inner workings of money. So this morning we also proudly announced that Seetee has formed a partnership with Blockstream, a global leader in blockchain technology, and Blockstream's leadership includes Adam Back, the inventor of Hashcash, a 1997 precursor to Bitcoin. So look, yeah, again, good stuff. And look, quick shout out to Adam and Samson at Blockstream. I'm actually going to have Samson Mao from Blockstream on the show here next week to talk more about this partnership, which, I'm excited to catch up with Samson again. So do keep an eye out for that. But let's get back to this Bitcoin letter. It's dense, but it's bullish and fascinating, I think. So he goes on. Again, this is the second richest man in Norway talking here. And he says, "Not investing is the riskiest decision we could make. Risk is not an obvious concept. What's commonly considered risky is frequently not, and vice versa. We are used to thinking that cash is risk-free, but it is not. It's implicitly taxed by inflation at a small rate every year, and this adds up. Central bankers have magically agreed that they should target 2% inflation, implying that 1/3 of your money's worth is taxed away every 20 years. So what is risk? It is all relative. In 2018, the Twitter hashtag #GetOffZero started to circulate. The main argument being that it may be irresponsible not to include some exposure to Bitcoin given the asymmetric return properties. Even if you don't get the underlying cypherpunk and libertarian ideals, you still need to consider the potential diversification benefits of Bitcoin." Well, that is very true, isn't it? Yeah, I mean, very true indeed. In fact, that's one of the best ways that I used to try and explain a Bitcoin is simply that it's, one of those, perhaps the best available asymmetric opportunity on the planet with asymmetric potential upside and limited downside, and that you can only lose everything that you put in, but the upside gains are significantly higher. But anyway, I digress. Let's keep going here. One of my favorite questions to people who ask me about the risk is, what about the risk of losing out on the upside? Young professionals know they are risking their careers if they say yes to what become bad investments. What you really should get fired for is saying no and losing out to once-in-a-lifetime opportunities. Bitcoin might still go to zero, but it might also become the core of a new monetary architecture. If so, one Bitcoin might be worth millions of dollars. That asymmetry is interesting to a portfolio. People who know the most about Bitcoin believe its future success is nearly inevitable, whereas the other camp thinks its failure is equally certain. Status quo is not possible. Yeah, so again, that's a, a pretty good explanation of, the asymmetry involved. So if we keep going, we're almost done, guys. We're almost done. Good, good. I really appreciate you listening to this slightly different version of the crypto conversation. I'll be absolutely fascinated to hear any feedback you might have, good or bad. You can always get at me on Twitter at Andy Pickering NZ, or just drop me an email, andy@bradenewcoin.com. But yeah, let's keep going with this letter. He says, it has been more than a decade since the pseudonymous Satoshi Nakamoto published his, her, or their paper and launched a new form of electronic money in Bitcoin. I was skeptical of Bitcoin for many years, and my arguments were consistent with everyone else's. The network's electricity consumption is wasteful. The network cannot scale. Its ideals of anonymity play into the hands of criminals, and so on. Money is a human invention, a social construct that only works since we all collectively believe in it. In fact, the term fiat money is derived from the Latin word fiat, which means an act of will that creates something without further effort. Of all the previous attempts at digital currencies, Bitcoin was the one that broke out. In the beginning, it was worth 0.0, but the more people that believe in it, the more valuable it becomes. That's a classic network effect. Yes, Bitcoin consumes electricity, but we believe Bitcoin will enable applications that create tremendous value. If so, it will be ingrained into the social fabric and cannot go to zero, since it will become immune to the political forces that destroy a currency. If this scenario plays out, we might change our focus from the price of a Bitcoin to that of a Satoshi. If our phones are full of Bitcoin applications in 5 years, the network's value is a stairway to heaven. So, is it wasteful? To achieve the ambitions in the Paris Agreement, we need to vastly increase the electrification of society, which will drive higher demand for electrical power. But we need that electricity to come from renewable sources. Wind and solar are now cheap enough, but they are intermittent, and they only produce when the wind blows or the sun shines. To transform this into baseload power that can be supplied at any given time, there is a need for batteries in all forms. These batteries are the missing piece in the puzzle to enable the energy transition. Remember, 1 litre of gasoline contains the equivalent of a little less than 10 kilowatts of energy, but less than 30% can be retained as useful power to move a vehicle because of the energy loss in an internal combustion engine. You don't buy gasoline because you want the cheapest energy. You buy it because it's an excellent battery. Like Exxon is a battery company. The network consumes energy to ensure it remains secure. Remember, banks are government-regulated custodians. We pay fees to mediate trust. Bitcoin has solved that problem in a way where two parties can transact without verifying and trusting each other, circumventing the need for a third party like a bank. But the mechanism does require electricity, and that's where miners come in. So the miners use electricity and are compensated with Bitcoin. The financiers of mining operations will insist on using the cheapest energy, and so by definition, it may well be electricity that has no better economic use. And so this is why Bitcoin acts like an economic battery. What was otherwise of little value locally is turned into an economic asset that can be used globally. Extremely flexible demand from miners can optimize the local supply and demand for electricity, which may accelerate the energy transition by improving the economics for new renewable projects. So again, really good stuff here from someone who's really thought about what is going on with the mechanics of Bitcoin mining and how renewables and cheap energy play into all this. So he goes on to talk more about this, and he says, in discussing this with Adam at Blockstream, I realized they already have grid balancing technology that plays right into what we are trying to do at Aker Horizons. Sometimes we can pump water into hydro reservoirs and turn intermittent capacity into baseload. Sometimes we will produce green hydrogen and ammonia to reduce emissions in areas such as shipping. Bitcoin is less obvious, but I'm certain it will enable many more renewable projects than would otherwise be possible. Bitcoin's electricity consumption must be analysed with respect to the future scenarios for the network. A lot of volatility is natural when market participants are trying to forecast whether Bitcoin is A, a speculative bubble, or B, a digital scarce asset that could replace gold as a store of value, or 3, a monetary architecture that will serve as the trust and verification layer for numerous types of transactions. Miners will not expend energy if their Bitcoin rewards are rendered worthless. If that's your view, the discussion is moot. But what if Bitcoin replaces gold as an asset class for portfolio diversification and store of value? Now, to all the gold bugs out there, this is not our prediction. Thousands of years of history as sound money means gold will likely remain attractive. We merely use this example to show that Bitcoin's scarcity would be sufficient and the environmental price would be much lower. Also, to be clear, this scenario is not why we are excited about Bitcoin, but it may be the easiest use case to understand. Current gold production is around 3,000 tonnes a year against an inventory of about 200,000 tonnes, which is all the gold that has been produced through history. Of that, less than half is used for jewellery, and the so-called stock-to-flow ratio, a measure of scarcity where a higher number is better, is currently around 56. So at the current rate of production, it would take 56 years to double the inventory. Now, what's the comparable scarcity of Bitcoin? Well, current block reward is 6.25 Bitcoin, 900 Bitcoins every day, or 328,500 per year. So given 18.6 million Bitcoin already mined, stock to flow is currently approximately 56, on par with gold. However, after the next halving in 2024, the stock will be higher and the flow will be lower. So stock to flow will be more than double that of gold, making Bitcoin more scarce than our scarcest commodity. Now, the estimated CO2 emission for producing new gold is more than 100 million tonnes per year. This compares to Bitcoin's estimate of around 30 million tonnes annually, less than a third of gold. And so as renewables increase in the mix, Bitcoin's CO2 emission should drop significantly. And this is still disregarding the cost of refining and storing gold. So that's the most, and we still are left with the most optimistic scenario for Bitcoin, or the one that gets us excited, where Bitcoin's ability to verify transactions between two parties without a trusted third party is used to build an ecosystem of applications. We are already exploring block streams, liquid and elements products for industrial applications, foreign exchange, cash management, trade settlements, and emission verifications, but these are merely the obvious ones. The broader potential? Well, that is all about economic access for the unbanked through saving, spending, and lending services, micropayments with the Lightning Network, ownership of private data, technology that can disrupt compliance, with the added benefit of improved security and near-instant settlement. We don't know how this will play out. Many technologies will compete to solve these challenges, but we do know that many applications are too important to leave to the verification of centralized systems owned by a corporation or controlled by a single country. So what about the electricity consumption in this scenario? Clearly, the protocol is designed to cut the rewards in half every 4 years or so, and miners will only expend the electricity if it remains profitable. So if 18.6 million of the maximum 21 million Bitcoin exists today, and at the end of this year, 90% of the Bitcoin will already be in existence and paid for. 9/10 of the infrastructure is already there. And as the block reward goes down significantly over time, miners would be willing to expend less electricity, all things being equal. And so either the variable transaction fees or the price of Bitcoin have to increase substantially to compensate the miners as the block reward approaches 0. And presumably, that's only possible if every transaction on the main chain always involves large amounts, because billions of smaller transactions would have to execute with acceptable security and second layers and side chains. This is only commercially and economically viable if the value of verifying large transactions without a trusted third party is sufficiently high. So this implies high demand for Bitcoin's network architecture, which means useful applications that create tremendous value have been built on top of the core network. Bitcoin can therefore only survive, and electricity will only be consumed if the value created by the network is sufficient. So even completely disregarding Bitcoin acting as an economic battery that may improve the economics of renewable projects, which could accelerate the installation of intermittent sources of electricity, we don't see a long-term problem relating to Bitcoin's electricity consumption. If it's a bubble, it dies and consumes nothing. If it's digital gold, it's more efficient and will emit less than the asset it disrupts. And if it's really successful, it's because of demand from truly value-creating applications that define the future and should be worth the electricity cost. All right, I'm going to stop there. So that is, that's most of the letter, certainly over half of the letter. There's more, as I say, put that in the show notes if you want to read the rest of it. Look, I hope you did get some value out of hearing me try and pull some gems of wisdom out of that and just articulate a little bit about why I think that is bullish for Bitcoin as, more companies and more smart people around the world come to these sort of conclusions after doing, the necessary reading and listening and research, then, it's hard not to come to similar conclusions. And, as a Bitcoiner, it just really is very exciting to see this playing out around the world at the moment. So, again, thank you for indulging this slightly different episode of the Crypto Conversation. As I say, do give me some feedback. Let me know if there's any interest in episodes like this or not, because I only want to do them if they're interesting. So, as I say, get at me on Twitter at AndyPickeringNZ, or just drop me an email, andy@bravenewcoin.com. Okay, better leave it there. Thank you so much for listening, as always. If you did enjoy the show, or usually enjoy the show, do please feel free to subscribe to the Crypto Conversation in whatever podcast app you are using. But for now, I am out of here. All right, this was the Crypto Conversation for Brave New Coin.